You know, trade is this massive overarching story, but the NASDAQ is up 5% this month. The markets don't seem to care. How come?
Yeah, you know, I think there's a couple things here, Sally. I think that if the market looks at this as there's going to be an exit ramp on the trade war highway at some point in time. And you'll see the market has reacted very positively when we get good news on trade. So, for example, when we didn't escalate with the Eurozone, the market went higher. When we get the framework of a deal with Mexico, the market went higher. As negotiations with Canada seem to be going better, the market seems to have a tailwind. The problem is when we get that bad news, like Trump's comment about the EU and the deal not being good enough last night, the market takes a pullback. So today I think we're stuck in a tug of war right now because we'll probably get good news on Canada. It doesn't happen until after the bell. So all we're stuck with is, hey, you know, we're getting more aggressive. We're escalating with China, and we're certainly not accepting what the EU has to say so far in the negotiations. So I think this is still a headwind. And I agree with Jimmy. It's not going to crash the economy, but it's not good. And during a midterm election cycle, when China's going to come after a lot of the Trump voters and the Trump voters' products, I think it's going to be very difficult for Republicans to make a strong case.
You use the off-ramp analogy, so I'm going to take this in a bizarre direction. You ever see the movie Thelma and Louise?
Yeah, absolutely.
All right, spoiler alert. At the end, they drive off the cliff. They do not stop the car. They hold hands, and they go sailing off into eternity. What if there is no off-ramp? What if everybody just digs in like two kids in third grade in recess who start throwing punches after mouthing off to each other for a while, or maybe that was just me? You get the point. What's the worst case scenario for the stock market?
Well, the worst case scenario for the stock market, this is a long, drawn-out, mutually destructive trade war with China. And remember, they have other things that they can do. They can say, hey, let's boycott some of the services, and your economy is 85% services. Let's boycott, you know, Apple products. That's very important to Apple. So let's not let you have businesses or access to our economy. Clearly, all those things that are non-material right now in terms of the negotiation process become very material as this draws out. I think it makes much more sense to have an end game in mind and say, we would accept this. Here's our end game. If we can get anywhere close to this, let's declare victory and walk away from this.
When do we know to sell some? When do we know then to get a little safe? Or when do we know that this puffery is going to turn into something more, and maybe it's time to put a little cash in the bank, if you know what I mean?
Yeah, well, we've had a real good run so far this year, and, you know, quite candidly, the calendar isn't good in September and October. So if you were so inclined to say this gets worse before it gets better, the best way to hedge yourself is to have a level of cash. And I would say September and October is probably a time frame that you want to start thinking about that. I think that it is, you know, it probably makes sense to have more cash than normal on your balance sheet as you head into the end of the year. There's going to be a lot of machinations in the market. Although fourth quarters in election years tend to be good, September and October don't, and there's plenty of headwinds in the market right now. So if you're so inclined to believe this gets worse before it gets better, now's the time to raise a little cash.
What are the odds that Art Hogan watches Thelma and Louise this weekend? 20%?
Yeah, I'd say a little less than that.